There's a lot of economic news to digest today. Mixed signals on employment, another drop in the markets, and growing fears from the debt and deficit crisis in Europe. Joining us now, James Galbraith. He's an economist and professor of government at the LBJ School of Public Affairs at the University of Texas at Austin. Professor Galbraith, welcome back to Bloomberg News. Always good to see you.
Thank you. Good to be with you.
Sir, almost a year to the day, February 6th of 2009, you were on Bloomberg TV. And at that time, you called the decline in employment, quoting here, calamitous. What's your assessment today, given that unexpected drop in the jobless rate last month? Is the Labor Department, as Neil Sauce of Credit Suisse told us today, beginning to find its bottom? Or is it, as Ethan Harris of Bank of America Merrill Lynch told us, a fluke because we're still losing jobs?
Well, beginning to find the bottom is about right. It's not a report that had a lot of news in it. There was not new job creation, is still some net job loss. So the drop in the unemployment rate must be mostly people leaving the labor force. And once we get what we really are all waiting for, which is new hiring in any volume, people will come back into the labor force, and that will make the unemployment rate quite sticky. It will be very hard to bring it down very quickly, even if employers return to hiring.
Well, Professor, you bring up a very salient point because, as you know, a lot of discouraged workers are still on the sidelines. They have just given up trying to look for jobs. And we should point out today that there's the so-called underemployment rate. That includes part-time workers who would prefer full-time work and people who want to work but have given up looking. And that number fell to 16.5% from 17.3%. How do we get those people back into the workforce, particularly considering that some of the jobs would be part-time or contract work?
Well, it's going to require a much stronger economy and a return to real job creation. In the Clinton years, over 48 months or longer, 96 months, we had job creation that ran 200,000 to 300,000 jobs a month. We're going to need something like that again, and we're going to need more to absorb all the people, to reabsorb all the people who've left the labor force, have been laid off in this crisis. It's a huge problem.
So much talk of late about the need for further stimulus with unemployment coming down now, albeit slightly. So do you suggest that we can wait until further support for the economy?
No, I don't think it can wait. I think the president basically has called for a jobs initiative, and that really has to be very high priority for Congress now.
Okay. Now, your father, of course, John Kenneth Galbraith, the author of American Capitalism, published in 1952, and the big one, The Great Crash, 1929, published in 1954. Are there any lessons about that recovery, jobs that are applicable today?
Well, yes. I mean, the private sector, the credit sector, didn't really recover in the Great Depression until after the war. So if the situation here is similar, and there are some respects that it is, that we're going to need a sustained effort on the public side. It's not something that will go away with just maybe even one more stimulus package. Is not going to bring us back to the model of private bank-financed growth that we had in the 1990s and in the last decade.
So, Professor, might I ask then, how do you define sustainable job growth?
Enough to absorb the unemployed in a fairly short period of time. If we could get them back to work in 3 years, that would be a huge success. 5 years would be the limit of what's politically acceptable.
Professor,
allowing them to stay unemployed is going to be a major problem.
Right. Professor, we were actually having a difficult discussion in the newsroom this morning about these jobless figures because they can be a little bit complicated and at times a little bit confusing. Can you explain the disparity between the household survey, which increased by 541,000 workers last month, and the still negative non-farm payrolls change?
I haven't got the document in front of me, so I think I'd better not attempt that on the air.
Okay, that's fair enough. You mentioned briefly, you were talking about the White House and stimulus and what's being done. The White House economic advisors did say at the time that that $787 billion stimulus plan was put into effect, that it would keep unemployment below 8%. Is the stimulus working?
The stimulus has worked. There would be much more joblessness without it. Last year, though, they were accepting a consensus forecast, which was far too optimistic, as I said at the time, as you've noted earlier in the broadcast.
And we are expecting to hear from President Obama speak at a small business, the administration's strategy to boost the jobless rate, as you probably know, is zeroing in on the small business sector. Is that the right strategy?
It will help. Everything that we can do that will give employers incentives to hire people and make credit available to small business is certainly a step in the right direction.
I want to switch gears here, maybe work it into the overall economic picture in the U.S. and how it expands globally. Obviously, we're keeping a very close eye right now on the European debt situation. Greece has been in the news lately. U.S. stocks are selling off, likely on a ripple effect from concerns. We're seeing the euro get hammered. Characterize for me how big of a problem this is and what we need to really be here in the U.S. on guard for to protect our own interests.
Well, I think we're seeing signs of an incipient panic in Europe, one which may is affecting the stability of the euro and may ultimately test whether every country that's in the Eurozone can stay there. The situation in Greece is very dire. The government has announced a truly draconian budget program, but in order to make it work, the European community has to come in with assistance, and it's not clear they're going to do so.
Professor,
I understand that today, in Portugal, the opposition defeated an austerity package.
Right.
That may be adding to the sense of anxiety in European markets right now as well.
Professor, we also note that today here at Bloomberg, we have a story, China defaulting loans soar. That's according to an insolvency lawyer there. How does China play into this, what appears to be a global economic recovery?
China, of course, has contributed a lot by having the first really effective stimulus package and a relatively high growth rate. I would not be concerned about the financial ramifications of Chinese loan defaults because their financial market is still fairly insulated from the one that we share with the Europeans. What's going on now is anxiety about the euro, a flight to quality to the dollar, and as the dollar goes up, you would expect the Dow to come down because basically what's happening is that the dollar value of European earnings of American firms falls when the dollar rises. So all of these things are very, very closely connected.
Professor, I realize that there can be no crystal ball for things like this, but in the next 15 seconds or so, where are we at a couple of months from now?
Well, I think everything depends right now. All eyes on Paris and Berlin, especially Berlin. Is the European community, the big countries, are they going to step up and save their system? That is going to be the determining factor, in my view, in the next couple of months.
Professor James Galbraith joining us from the University of Texas at Austin. Professor, always good to talk to you. Thanks.